To discuss more about futures investment amid global commodity price fluctuation, we have Mr. Vicky Amarnani, market strategist of Monex Investindo Futures. So, good morning, sir.
How are you? Good morning. Good.
Yeah, thank you for joining us in the studio. So, firstly, we'll be more talking about performance of Indonesian economy.
Yes.
In 2014. As we know that the data has been released, the economic growth in the third quarter shows a really poor result of 5.01%.
Yeah.
Yeah. How's the evaluation of Indonesian performance of the economy?
Okay, if you see from 2009 to 2012 towards early 2013, Indonesia has been posting GDP growth of above 6%. So at the level of 5.01% for the third quarter is a disappointment. That's the reason why we've seen the rupiah again depreciate back to 12,150 levels. But from the grand scheme of things, I think 5% growth is really not bad, especially in consideration to neighboring countries or developed nations which are posting like negative growth in the Eurozone, or even US, which is still posting barely close to 2% growth. So from that angle, I think Indonesia's growth is still promising. But looking at the rupiah, yes, I do not see any strong rebound or strengthening in the rupiah. Maybe the best case I would see in the rupiah is about 11,800.
11,800.
Yeah. Maybe besides the domestic factors, I mean, Indonesia wants to increase its fuel prices now. Basically, they want to cut down the subsidy, which is a good thing for the rupiah, and that could support the rupiah.
Not in the short term.
Short term, that could support the rupiah, basically, because foreign investors would be happy. Because we have to understand that Indonesia is also affected by foreign investors. There's a lot of foreign investors who invest into the bond market. 40% of the local stock market is invested by foreigners. So whenever there is a sell-off and foreigners do not like the certain policy or certain actions that are taken, they sell the stocks, they convert from rupiah back to US dollars, and that affects the Indonesian rupiah. So we have to understand the bond market and stock market is impacted, and that indirectly also impacts the rupiah. So my forecast is the fuel subsidy being cut is a positive thing. But if you look at the external factor, the overall strengthening of the dollar, the dollar economy improving, looking to hike interest rates by mid next year, those are all negatives for Indonesian rupiah, basically. And we can see that not only Indonesia, but even other currencies such as the Brazilian reais, Turkish lira, or other emerging currencies which are getting impacted by the strengthening of the dollar. Yeah.
All the emerging countries.
All the emerging currencies, yeah.
All right. Initially, you mentioned about about the foreign investors, and then how is actually the urgency of limiting foreign investments?
I think Indonesia needs FDI, one of the resources for Indonesia growing, becoming investment grade, building that credibility has been through foreign direct investment as well. So I think that is an essential thing. They have to maintain the foreign direct investment. Yes, it gets subject to capital outflows, but it is yet a necessity for the economy to in the path of improving. And now Indonesia has also got an investment grade, which is a good thing and enables a lot of people to invest into Indonesia, because a lot of institutions, hedge funds can only invest into investment grade countries. Yeah.
What's the investment grade?
Triple B minus.
Triple B minus
is the minimum investment grade. Yeah.
So how's the current investment grade in Indonesia?
Yeah, Indonesia is basically by Moody's S&P has already been rated investment grade, which is a good thing. But yes, now we just have to understand the situation. You know, when the 2008 crisis happened, everyone was sort of running off the dollar. USD interest rates came off. Nobody was interested in the dollar. That's when all money flooded out from the US into emerging market countries such as BRIC, Brazil, Russia, India, China.
Yeah,
but now with the whole economy in US improving, US stocks doing really well, good dividends, basically money is flowing back into the US, and this is actually harming the Indonesian rupiah. Yeah.
Harming the Indonesian rupiah.
Yeah.
Okay, back to the economic growth. Initially, Bank Indonesia predicted the growth will be about 4.9%, whereas we got 5.01%. Is that a sign of a good thing, or maybe?
Well, that's why I said, I mean, the market expectation was probably still, you know, towards the mid 5%, or at least for 5.35. So 5% was a disappointment. But we have to understand that basically it is one of the main reasons for the slowdown is the slowdown exports, which is impacted by slowdown in China and Europe as well. I think those are two main markets that have impacted Indonesia as well. And as a whole, the whole commodity market. I mean, there's been a big sell-off in the commodity markets with the dollar strength and slowing demand. Even in terms of jewelry, gold, mining companies, there's been slowdown from big countries such as China and India as well for gold investment. Yeah.
For gold investment.
Yeah.
All right. At this situation, what should be done by government to make investment climate more suitable?
Okay, I think the government spending needs to continue, and they got to deviate it a lot into infrastructure, because Indonesia is a good economy with a lot of natural resources, but the infrastructure needs a lot of growth, still a lot of improvement. So that's what they're doing. They're looking to improve the infrastructure. Foreign direct investment, I think, is still an important component for the success of Indonesian economy, and basically. With the thing of USD strengthening, I foresee that Bank Indonesia may have to increase rates further to support the rupiah.
Increase the rate.
Increase the rates. I mean, currently we're at 7.5.
That is surprising.
Yeah, I could see another 50 basis hike also. I do understand that it does impact the economy. If rates are too high, it becomes a big burden for businesses to pay interest. But at this point, maybe, you know, with the dollar strength, that could be another action that the Bank Indonesia may have to take. And we have seen in the past years where Indonesian interest rates have even gone to double interest rate, you know, so that could be a thing in the near 6 months to 1 year as well. Yeah.
6 months to 1 year. All right then. We'll continue the discussion after a break.
Thank you.
Yeah, we'll be right back with more discussion. Stay tuned.
Stay tuned for more business insights on MNC Business.
The sun has risen.
Di bawah 0,5 dapat dikatakan inflasi Indonesia semakin membaik.
When the sun is up, it's time to start your new day.
Menguat ke level pagi ini 11.850 ya Mas ya.
Cukup signifikan.
Get your breakfast here with the latest news.
Tukar tidak mudah ya, dan tidak terutama perlu biaya tinggi, yang kedua waktunya juga tidak bisa singkat.
Power Breakfast on MNC Business.
Dance with Monik Mino. Audisi Tangerang telah sukses digelar. Giliran kota selanjutnya nih. Yuk, ajak keluarga adik-adik untuk menyaksikan audisi Dance with Monik Mino. Ada meet and greet dengan Monik dan Mino, penampilan si penyanyi cilik Romaria, storyteller performance, serta ikuti pula games dan kuis seru berhadiah. Dance with Monik Mino.
Inspiration on MNC Business.
Welcome back. Our discussion is about futures investment and amid global commodity price fluctuation. And we still have Mr. Vicky Amarnani, market strategist of Monex Invest in the Futures. So continuing this discussion, so about futures investment. Looking at current economic performance in Indonesia, how that affect futures investment?
Okay. Yes, sometimes when people have seen the big movement in gold, for example, gold from late 2011 from a high of $1,924 per troy ounce has dropped 40% now, trading at $1,155. Sometimes that brings an impact on people that, okay, yes, you know, gold prices can be quite volatile, but I would like to emphasize over here that when it's futures trading, you do not trade long-term in the market. Especially now after 2008, people have learned that it is holding positions for too long with too much uncertainty can be risky. So when you do futures trading or
so it's more suitable for short-term.
Yes, when you're actually trading futures trading, the best part of the market is that it's open 24 hours from Monday till Saturday morning, and you can also benefit from prices going up or down. So you could actually sell a position, sell to open and buy to close, or buy to open and sell to close. So you could benefit from a price going up or down. So this way, there's always opportunities in the futures market, especially when you see gold prices down 40%, oil down 25%. Not necessarily maybe a buying opportunity, but depending on your trading style, trading strategy, are you doing intraday trades? Are you trading only for a couple of hours in the market or holding positions for 1-2 weeks? There are various opportunities that can be taken in the market. Yeah.
All right then. In terms of gold, how do you see that?
Okay, yes, I think a lot of people have queries now. People are wondering now, okay, now with gold dropping to $1,155 or down 5%, another 5% this year.
Another 5%.
is it already towards the bottom? Because an interesting fact is for big gold companies like Goldcorp, for them to produce gold, their cost is $770 per troy ounce. But actually running the company, the administration, paying salaries, their break-even cost is at about $1,000 to $1,100. And now we are at $1,155, just $55, you know, below their cost price. So the market thought is that if it drops further below 1,100, these gold producers will reduce supply, so the price increases back up again. And I believe that basically. I think gold has a support towards 1,100 or maybe $1,085, and yet, but then I do not see gold rebounding back a lot. Basically, because fundamentally and technically, nothing is supporting gold.
At the end of the year?
By the end of the year, it's still going to remain range bound within here. Yeah, I think still, you know, close to the 180 to 1,200. Why? Because fundamentally and technically, nothing is supporting gold. Firstly, gold doesn't yield any interest. If you buy gold, you don't get any interest. That's why people are going to the US stock market. Second thing, inflation. There is no inflation in the US. International gold prices are against US dollar. US dollar inflation is still at 1.3, 1.4%, well below the 2% target. So usually gold is a inflation hedge instrument. So for example, if there's no inflation, that won't support gold. Third thing, even if you see technically on the charts, it's clearly on a downtrend. There is a bit of rebound, or it consolidates, and it tends to go back down again. So temporarily, it'll be difficult to see any big rebound on gold. In fact, now 1,180, which was a strong support, has become a strong resistance. If it tends to break that, I think maybe the maximum upside now is to $1,230. So I would in fact trade the range. Maybe, but for more conservative traders, I would say sell on rebound. So if you see levels of 1,180 to 1,190, I would be a seller of gold over there.
All right then, but the rebound is going to happen in what time?
Basically, over the next couple of weeks. I mean, basically by mid-December, it's already almost the end of the year prior to Christmas. But basically, with the data coming out, we will see fluctuations of $20 to $30 in gold. And if there is a $20 to $30 rebound upwards, I would take that as a selling opportunity, because I could see many hedge funds, institutions, retailers who would actually look at selling at those points, because now completely we have broken new lows. Fundamentally, technically, everything is bearish on gold. Yes, medium term for physical gold buyers, I would agree to buy physical gold at this point, with gold down 40%. But
physical gold.
Yes, but that's physical gold, but more long term, so 3 years or longer. In fact, I think even 1 year down the line, gold prices could be higher. But from a trading perspective, I would sell on rebound. Yeah.
All right, so in terms of oil, how do you see that?
Yes, oil has been an interesting story. I mean, if you just look back to June this year, oil was trading at $107 per barrel. This is WTI, West Texas Intermediate. And now it's fallen about 25% to $77. What are the causes? Stronger dollar, a lot of supply. Saudi Arabia has increased its output. Saudi Arabia just made an announcement that it's going to reduce its cost price to the US because they want to gain bigger market share. Even technically, oil has been on a breakdown. So all these factors have actually impacted on oil dropping drastically. But with oil, it's an interesting story. I think with oil, a lot of the negative news is already priced in. So currently with $77, yes, oil could actually drop down to, as there's a very strong support at $67, and oil could go down to the low 70s. But people who have a risk appetite to slowly accumulate oil, I would be accumulating oil at mid-70 levels, at 75, 73. I think those are interesting levels, because the fact is the US economy is improving. China GDP, even though there's a slowdown, is well above 7%. Emerging markets are stagnating, but oil demand will come back up again. And I see the fair value of oil still at $85 per barrel. You know?
$85?
Yes.
All right then. And then how to secure, okay, back to gold investment. How to secure gold investment from inflation and currency shocks?
Okay, basically now, okay, currencies tend to weaken against gold, if you see from the long-term picture. That's why I said if you want to actually have exposure to gold, for a long-term perspective, you think it's down 40%, buy physical gold. But at this current scenario, even though gold is down 40%, I don't see a big rebound because of all the factors mentioned. You know, low inflation, dollar strength, gold is not a yielding asset, doesn't give any interest rate. So with all that in mind, basically, I think gold is going to be range-bound. But I do not see gold breaking below 1,050 as an extreme support level, which is only about $100 from current levels. Yeah.
All right then. Yeah. And then that the rupiah exchange rate, as we know, by 10 November, the rupiah exchange rate hits 12,171 rupiah per US dollar.
Correct, back
What's your
towards the
take?
highs, yeah. I mean, it's basically, like I mentioned earlier, it's also the foreigners. People have become a little, in a way, fed up because people who have been buying bonds and stocks are actually losing money because of the depreciation in rupiah, because their calculation is in US dollars. So that's one major reason why people have actually started to cut down investments in Indonesia, which is impacted. And second thing is the exports. Because exports have slowed down, that's led to a deficit. This is also another reason why the rupiah is depreciating, but also, like mentioned, external factor. Because of dollar strength, the dollar index strengthening, all emerging markets are getting hurt. That's why there is the reason for Indonesia to basically cut the fuel subsidies. It's very urgently required because they're already under a deficit. In fact, it'll drain their international reserves if they do not cut the fuel subsidy. Though oil price dropping from 107 levels in June down to 77 levels is actually a positive for Indonesia, because Indonesia is a net importer of oil.
Right.
Even though they have produced oil, their consumption is more than their production.
All right then, yeah. We'll continue this discussion after a break.
Thank you.
Don't go anywhere. We'll still have one more segment for discussion. Stay with us. Welcome back. I'm still with Mr. Vicky Amarnani, market strategist of Monex Invest in the Futures, and we are talking about futures investment and mid-global commodity price fluctuation. So, talking about futures investment, what is the mechanism of futures investment? How does it work?
Okay, this is a very, very good question. I mean, basically with futures trading, we need to understand that what is the purpose. Basically, one of the key benefits of futures trading is that you can trade on margin. Basically, it enables you to have a bigger exposure in the market with a smaller amount of money. So, for example, you could control $100,000 with just $1,000 margin. But is that good? No, it's not good. That's why I always say when you trade, you should not trade with the most minimum margin. You should trade with the optimal amount of money. So, for example, if you're trading like currencies and you're trading about one lot, you should have at least $5,000 to $10,000 worth of cash to basically trade those amounts. So, basically, in futures trading, you do not own the assets. The benefit of here is, the reason you don't own the assets is because the purpose is to trade. It's not actually
trade, but you don't have the asset.
You don't have the asset. So it's actually not called futures investments, futures trading. Without owning the asset, your purpose is basically to gain between the buying and the selling price. Just gain between the difference. For example, if you trade gold through the futures, through the spot market, the spread for gold is only 50 cents per troy ounce. 1 troy ounce is 30.1 grams, 31 grams. So if you divide 50 cents by 31 grams, you're actually paying only 200 rupiah per gram. Whereas when you're buying physical gold, you're paying about 10,000 rupiah per gram. So we need to make a clear distinction. When we are trading, we are looking for a minimal fluctuation and trying to come in and out of the market very quickly. Whereas when you buy physical gold, you cannot get that benefit, because when you buy physical gold, because the spread is so wide, the buying and selling price, you need a movement of at least 5 to 6% just to cover up your cost, the buying and selling price difference. So you cannot buy, physical gold, sell, buy, sell. It's more of a buy and hold, I would say, for a good period of 3 years.
And the cost is higher.
Yes, I mean, okay, basically there is a cost of making, and whereas compared to futures trading, there is no cost.
How does it work? The cost of making, blah, blah, blah.
Oh, yeah, it depends. I mean, that's why when you buy gold, I always suggest you buy bars or coins. You don't buy jewelry. I don't see jewelry as an investment. Why? Because you lose a lot of money in the design fee. Especially when you buy jewelry like of Italian design, the design fee is very high. But when you want to sell that jewelry, it's the same thing as them melting all the gold, and what's the value in grams.
High markup for it.
High markup for jewelry, especially with fancy design. So if you want to buy physical gold, buy gold bars or coins.
Bullions.
Yeah, bullions. But if you want to, for example, benefit from the current movement in the market, just want to look for a quick movement or even 0.5%, 1%, it can be done through the futures market. Yeah.
All right then. And then, how to anticipate sentiment from rupiah exchange rate stability? How will rupiah depreciation affect domestic stock market?
Okay, if the rupiah continues to depreciate, because 40% of the investors are foreigners, they will pull out more money, there will be more panic, and that will basically cause the rupiah to weaken further. So it is essential for Indonesia to maintain stability for the Indonesian rupiah as well, because it'll affect the foreign direct investments. People would actually pull out, or new people would stop coming in if they continuously see the rupiah decline. If you see from 2011, the rupiah has been on a continuous decline from 8,600 rupiah, continuously declining until 2011, when was 2013, 9.7, quickly to 12,200. That was a very steep decline. So from 8,600, the rupiah from 2011 has actually depreciated 40%.
40%.
Yeah, that's a big depreciation. So if this trend continues, it's going to impact foreign investors, it's going to impact the Indonesian rupiah, it's going to impact the economy. The only benefit is maybe from the export angle, because there's a currency war now between all countries. Everyone wants their currency to be weak so that they gain from exports, they benefit, because your earnings are in dollars from exports and your cost is in the local currency. So that is one benefit of a weaker rupiah. But long term, that's why I said I believe that rates may have to be further increased over the 6 to 12 months if the dollar continues to strengthen.
Whereas our problem is now in exportation.
Well, exports have slowed down, you know, especially from the Europe, from China, we have seen a slowdown. But I think that's a cycle. I mean, you would see slowdowns, a pick up back again. But yes, it is very important to maintain confidence in the country. I believe, like, the whole market is also driven by sentiment, basically. So the sentiment needs to be strong. Yeah.
All right then. And then to improve investment climate in Indonesia, Indonesia needs to revive its financial sector, reform its bureaucracy, and maintain a macroeconomic, also political stability.
Yes.
In your opinion, what are factors that are important to improve the investment climate in Indonesia?
Yes, political stability is important. I mean, it's a good thing now the presidential elections are over. The the uncertainty is at least gone.
Yeah.
President Jokowi is there. Okay, yes, maybe the other parties have a more major coalition, but okay, it is being sorted out. Fuel subsidies being cut. But yes, I think Indonesia needs to have more incentives for foreign direct investments, for multinational companies to come here. You need to promote competition. That is good for an economy going towards the footpath of a developed economy. Yeah.
All right then. And then continuing to the recommendation, your recommendation about the futures and the investment instrument. What will be the most strategic investment instrument at this moment? Short term, and then mid-term and long-term instruments?
Okay, I think one of the biggest tip I would give basically is buy US dollar. Yes, US dollar has had a bit of strength, so maybe I'll wait for a bit of a correction. But definitely, if you have portfolios with very minimal exposure to dollar, with the USD improving, uncertainty, we need to understand that USD is a primary currency. So in case of a whole risk-off mode, panic, everyone's going to run to the dollar. In fact, gold is maybe lost its charm as a safe haven investment because of the big volatility, the price drop and the volatility people have seen. So definitely we would have to have exposure to USD, and any weakness in the dollar is an opportunity to accumulate US dollars. In fact, even for futures trading against a lot of currencies such as the Aussie dollar, the euro, the sterling, any weakness in the dollar, so euro currency strengthening, sterling strengthening, the Aussie dollar strengthening to critical levels, we would have to use a technical analysis for that. Those would be selling opportunities. For example, if Aussie dollar comes to 0.9 thousand, those would be selling opportunities. If the sterling comes back to 1.6 thousand, 1.6100, those would be selling opportunities. Euro now is currently at 1.24. If it does go back up to 1.2750, those would be selling opportunities. So again, back to dollar strength. Buy US dollar, yes.
Is that for short term or mid term?
I think short to medium term would be, yes, dollar strength for both, even though it's short term and medium term. Currently, dollar strengthened a lot. Maybe for more aggressive investors, they could sell dollar at this point. But if not, I would rather basically buy the dollar on a correction. Yeah.
All right, then. Yeah, that is it. And thank you for your time, sir.
Thank you. Pleasure.
We appreciate it.
Thank you.
So, that was Mr. Vicky Amarnani, market strategist of Monex Invest in the Futures, talking about futures investment amid global commodity price fluctuation. And up next, we still have some more news and business updates. Stay with Revenues International.